been recovering from that sell-off they saw in the aftermath of Donald Trump's victory in the presidential election south of the border on November 5th. Now, of course, that Republican sweep pushed up the US dollar in anticipation of inflationary policies and bigger deficits, which would hold back interest rate cuts. Bullion has gained almost 30% this year. And we got that bullish outlook from Goldman Sachs that gold could hit $3,000 an ounce by the end of next year. Our guest says that the yellow metal has a chance of breaking 5,000 within the decade. We're joined now by Ben McMillan, Chief Investment Officer at IDX Advisors. Ben, thanks very much for coming on the show.
Thanks for having me.
So central bank buying, worries over U.S. deficits. There appear to be a lot of reasons why investors have been buying gold.
There are, and I think that, the big consistency is that, these are kind of secular tailwinds that show no signs of slowing down. So the central bank buying is something that's, started years and years ago, and that's going to play out, over the coming decade. And we think it's going to get even more aggressive. If you look at China, which was kind of the leader in this space, they've started going around to all the other BRIC nations and started, kind of pre-negotiating, even, commodity transactions that are denominated away from dollars. They've been selling down their treasuries and buying gold. So these are not small tailwinds, all of which conspire to, we think, push the price of gold much higher in the coming, 3, 4, 5 years.
That's interesting. So governments in, from what you're hearing, BRIC, Russia, Brazil, China, India, that crowd, they are interested in bypassing the US dollar in transactions.
Yeah, and this isn't new. I mean, this is something, honestly, when we first started seeing aggressive U.S. sanctions during the war in Ukraine, right, that's when you first started hearing rhetoric about, the oligarchs' yachts being seized and things like that, dollar-denominated assets being seized. And there was a lot of talk, not just out of the BRIC nations, but, within EU partners and things like that, saying, wait a second, if all of a sudden, US dollar, assets can be seized anywhere at any time unilaterally by the United States, countries might want to start thinking about holding wealth in, other forms. And, I think big central banks took that to heart. So this is the beginning of the end of, we think, dollar hegemony. Now, that doesn't mean that, the dollar is going to, evaporate tomorrow. This is going to play out over a generation at least. But, it is very interesting that you've seen, like I said, these BRIC countries in particular at the forefront of being very vocal about moving away from a dollar. And, there is no other currency, other than really gold for them to go to.
You're looking at the junior miners. You reckon that they are undervalued. Why are investors less interested in the smaller gold stocks right now? Because you think that you'd get more leverage in some cases.
Yeah, I mean, you get a lot more operational leverage, but, the flip side of that too, and it's not unlike what we've seen with small caps, domestically here in the States, is that, this is an environment over the last couple of years, which has just really favored big quality companies with big, strong balance sheets. And when you look at the juniors, they've been penalized because, a lot of them have much weaker balance sheets. A lot of them are more exploratory in nature. Investors are rewarding, proven reserves as opposed to, some, more, exploration-based reserves. But we do think, that's gotten to such a discount that we do think now there is a little bit more opportunity on a relative basis in the juniors relative to, some of the bigger cap names.
Alamos Gold is one name that's caught your eye. What do they have going for them?
Yeah, the great thing about Alamos is just kind of the operational consistency. Gold miners, the old joke is, the problem with gold miners is that they're run by gold miners. It's not a sector which is known historically for, having, really smooth operations. And, part of that is things like labor, where they operate, different countries, foreign jurisdictions causing problems. And, Alamos, again, has just done really well at having historically cost cutting. They're focused in Canada and Mexico, so you don't have a lot of the, concerns about, antagonistic foreign governments. And they've got a very ambitious plan for continued cost cutting. So that's one, it's about a $7 billion market cap. So it's not tiny, but it's also certainly not huge. That's one that's interesting for sure.
And then another idea you have is in Papua New Guinea, K92 Mining.
And K92 is a name we've mentioned before. The CEO has been on your program before, and they're really sharp. This is a smaller company. It's under $2 billion market cap, and they've done very well at growing organically. So where I said that the investors were rewarding kind of proven reserves of the majors. K92 is one group that's done a really good job of kind of growing production out of their mine in Papua New Guinea, and they've aggressively done so. They've even had some kind of innovative optimizations in terms of how they mine and gravity fed elevators and things like that. And so that's one too that combining their aggressive outlook for increasing reserves coupled with their market cap, we think makes it a really interesting acquisition target. So that's one that we've had our eye on for a while, we like for a while, and it's very interesting in the small cap space.
Yeah, because of course Barrick has assets in that part of the world. I wonder, would they ever take a sniff round at K92? Would it be big enough?
I wouldn't be surprised, honestly, at this point. K92's done a good job too of kind of establishing a footprint in that space. With not only with the government but with local labor and things like that. So, yeah, I mean, they are small, but they're not making any more gold. So I would imagine the majors are starting to take a close look at groups like this that have the footprint where they want to be.
Give us your view on copper. It seems to have been a bit of a heartbreaker for investors. Maybe if we put up a 5-year chart. I mean, there are plausible reasons why copper should go higher. It takes years to open a mine. We've got the world's economy electrifying, but the price hasn't done much lately.
It has, and I think part of that, to be frank, the last time we spoke several months ago, there was concerns about, copper kind of getting ahead of its skis in terms of the AI hype and the electrification. I think there was some merit to that. So I think part of that was just kind of, investors coming, taking some money off the table, so to speak. And part of that is the slowdown in China. Let's not ignore that, China's still the world's largest commodity importer. Copper is, one of their biggest metals. And, Dr. Copper, as they say, is, never wrong about kind of the direction of the global economy. And so, China was dealing with, with a very serious recession this, middle of this year, which they've just started to, push stimulus to try and get their way out of. And so I do think it'll be interesting going forward. There's two things we're looking at is, kind of obviously, China aggregate demand, as it relates to industrials like copper, and also Chinese yields is one to take a look at. If you look at the government bond yields as a discount to U.S. Treasuries, they're trading at about a 200 basis point.
Thank you.
That's still sitting for China. So that's still sending deflationary signals. Now the flip side is where U.S. dollar goes. We do in the intermediate to longer term, we think copper is absolutely going to be a winner, but it's got to work through some potential headwinds in the next couple of quarters here.
Sorry, Ben, I